What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. It is the 15th day of December, and here we are sitting at about 85.8K with 5 hours and 50 minutes left in the day. Hit that like button, subscribe. Let's get into it. I have a feeling that the low is in, you guys, that this is the low from the 21st. It's completely possible that we do go lower, and we'll go over that, right? If we do go lower, we might see something like this, but overall, the main thought, at least since the 21st, has been that we will be choppy and we will be moving sideways for 30 to 60 days. That Bitcoin will likely not get too far above 100K by the end of the year and will likely not see new all-time highs. We're not expecting a V-shaped recovery, but we're also not expecting a fantastic dump. Originally, and for most of this range, the expectation was that we'd maintain this trend up until this area. Where we found support before, we might find resistance now. We might continue up in this trend or break out of it to the upside. We have instead broken out to the downside. But here's the deal, and this I think this makes sense, what I'm about to say. I don't think we're breaking out. I think a lot of people right now, and in this time, you guys, since the 21st of November, we've been in very heavily manipulated environments. Absolutely we have. There's no denying it. In fact, if you are denying it, you're either intentionally denying it and you're putting your head in the sand, or you just don't know what you're talking about, because the 1 hour time frame, we look at this here, it's very obvious that these are BART-like maneuvers, and BART patterns only show up in manipulated environments. It's where the volume is so low that all it takes is a little bit of volume to push things up or down, right? And that's typically what happens. Push it up over a long period, you offload your profits, right? If you're the whale pushing it up, and then you push it down, then you sell the fat bag to push it down, then you accumulate again, and then whenever you've had your fill, you push it up, and you keep going back and forth. And this is typically all of these dumps and pumps. If you look at them, not every single one, but look at this, right? This one happened, this low happened here, right there. We started moving up around the 12th hour. Here, we started moving up on the 15th hour. Here, we started moving up on the 16th hour. Here, the low was on the 15th hour. We started moving up here the next day on the 14th hour. Here, we started moving up on the 15th hour. Here, we dumped down on the 15th hour. Do you see it? It's all around the 15th hour. 15th, 14th, 12th, 17th, whatever. This pump here on the 15th hour. That pump there on the 15th hour. This dump here was not on the 15th hour, actually, but this pump was. This dump was on the 15th hour, and this dump was on the 15th hour. It's all, or the 15th, 14th hour. It's all revolving around the opening of the stock market in the United States. That's what it is. So there's definitely some coordinated, manipulated, consistent selling and buying pressure every other day, it seems, or every day. Maybe not every single day, but it typically happens around the open of the stock market, right? So the purpose of this is that it's manipulated, right? The purpose of it, if you were a person manipulating the markets, the purpose is to stop hunt and generate FOMO at the top and panic at the lows. That's the whole purpose, right? How many people here FOMO'd because we had higher highs? How many people here FOMO'd because we had higher highs? How many people here FOMO'd because it looked like we were moving up again? That hey, we're not actually going to break out to the downside. Here we are moving up, and then we dumped. And then how many people panic sold? They didn't get to sell here or anywhere along the way. They only got to sell here. And they maybe there were some people who were holding out. They didn't sell. That was just enough to make them sell. And then we pumped right back up to where it was. Just enough to get above these highs, and then we dumped back down. Once you got a lower low, that's when you pumped, right? It's completely manipulated. And I'm driving that factor home because it's important to understand with what I'm about to say here. From a low, connecting the dots here, a lot of us out there are probably looking at this pattern. And I say a lot of us, I mean technical analysts out there are probably looking at this pattern as a bear flag. I'm assuming everybody and their mother is probably talking about this bear flag right now. I haven't watched any YouTube videos today. Maybe nobody's talking about it. Maybe this is I'm the first person to talk about it. I doubt it. Bear flags and bull flags are very easy to identify, and I would assume a lot of people are talking about this. If this is a bear flag, first off, it's a little bit unclear as to where the bear flag would start. Does it start there, or does it start here? Does it start all the way back here? You know, I don't think it starts all the way back there. I'm not going to measure that, but from one of these points, I think that's more or less fair. If this is a bear flag, the measurement would take us down to 65K. If this was the bear flag and it was the shorter one, the more conservative one, that still takes us down to about $70,000, 71K, which both of those targets would take us below these lows here from back in April. So a lot of people are probably right now, understand just the whole thought process. You have to stick with it. It's a picture. I'm painting it piece by piece, okay? If you hear one piece and you think you know what this picture is, you're probably not going to hear it, right? Or maybe we think the exact same, but I doubt it, right? Human beings, we think similarly, but we all have different meanings to our words, I suppose. Anyways, anybody who's assuming that this is a bear flag right now, because of what's happening right now today, because of the fact that we're breaking out of this ascending trend line, is probably celebrating, acting as if they're victorious right now, that we're breaking out of this trend, that we're breaking out of this consolidation phase, and that we're going lower. And hold up, again, I think I said this in the beginning of this video. If I didn't, let me say it again. We're not breaking out. We are actually, I know, we are breaking out of this trend line here, this ascending trend line, but we're not breaking out. And the volume tells us that we're not breaking out. And I will go over that in a second, guys, okay? I will tell you why we're not breaking out. This is not the consolidation phase. This is the consolidation phase. It's just all in this area. It doesn't matter that we have this trend line that broke. We'll get into that. But again, understanding the thought that since the 21st, every higher high has been a perfect moment to FOMO, and then we dump. Every lower low we get has been a perfect moment to panic sell, and then we pump, right? We're moving up, and then we're moving down, we're moving all around, but really we haven't gone anywhere. We're just tugging people's emotions. And as soon as emotions are high, we go the opposite direction. What do you think's happening right now? Everybody is probably bearish, right? We have consistent dropping over the past 4 days. People are wondering if now the bear market people were right. Are we actually in a bear market, right? So they're going to look to the bear market people, and the bear market people are clearly going to go for this very obvious setup, this very obvious bear flag pattern. Now, if it plays out, this video is going to look really silly, but if it goes the way that I think it's going to, we shouldn't go too much further. I think that we're at the low, right? The low today is 85.6K. That very well could be the low. We could go a little lower, but I think we're at the low. And my reasoning for that is I don't think that we're in a bear market. If we were in a bear market, then we would have no problem taking out a macro low from back in April. If we're in a bull market, like I assume we are, we should not be taking out macro lows. We should only be preserving them and providing new macro lows. So this should be a low, or at least something that might be below that low, yet above this low should be the low, right? So with my logic, my thought, my perspective, my bias in the market, which is a bullish bias, I'm thinking, is this a trap for the bears? And I think obviously it is, because again, we're not breaking out. If we were breaking out, we'd have a lot of volume. And I'm going to go back to this now. Don't get me wrong. Like on the daily time frame, it's basically non-existent. Basically non-existent at all. On the 1 hour time frame, there's some good volume here. Absolutely there is. But it's all relative. And everybody's zoomed in. Everybody's probably looking at the 1 hour time frame, the 15-minute time frames, the 1 minute time frames. Nobody's looking at the daily time frames. Nobody's taking in the big picture to account. They're looking at these little moves and assuming that they're big moves, because typically we're not doing anything. We're just moving sideways because we're very boring. We're in very low volume environments, right? Since the 21st of November, we've been in incredibly low volume environments. Look at the volume here after this spike, and then look at the volume before the spike. Look at how much more consistent it is. Since the 21st, you know why it is? You know why it is that we're here? It's because this was Thanksgiving. This is Thanksgiving week. People are gone. All the venture capitalists, all your hedge fund managers, all your trading desk associates, they're all on vacation. They're all on holiday. They're not trading, so there's no volume, right? So it's easier to manipulate the markets. That's why we're not going to see a Santa Claus rally, right? Because everybody's expecting it. It'll probably just move sideways, and then at the very end of the year, we're going to dump again. But I don't know if we go below this low. But again, look at the volume before and then after. Before, interesting, not so Barty, no Barts at all. Afterwards, very low volume and Bart City. Because in low volume environments, it's easy to do Bart City, and Bart City means manipulation. Okay, if we're in a manipulated environment, which it's the writing's on the wall. If you don't think this is a manipulated environment, especially since the 21st of November, if you don't think that we've been in a manipulated environment, I think since the 10th of October, but especially since the 21st of November, if you can't get on board with that at this point, then I can't help you. We just see things differently, right? I'm seeing the sunshine and you're seeing shadow. I don't know. We just live in different realities, and that's fine. But understand it, and this I've been focusing on this point this whole video for a reason. Understanding that we're in a manipulated environment means that you should expect Manipulation. You look at the daily time frame. If we were breaking out like we were here, look at this. We had a little bear flag right here. Look at that. When we broke out, do you see the volume that came with that? We broke out. So we moved down lower. That was a bear flag move. You see the volume that came with that? We're breaking out here. Where's the volume? You know, typically in a consolidation phase, before you break out, volume is at its lowest, right? Here, for example, we're in this consolidation area right here. And right before we broke out right here, guess what? Volume was its lowest. It had been slowly tapering off right before you broke out, right? Guess what? If we don't look at this as a bear flag, but we treat it like a zone like this, right? If we treat it like a zone, then you're not breaking out. You're actually getting to the point where you're close to breaking out because your volume's decreasing. Your volume was at its lowest points right before you broke out. Right here. Volume's at its lowest points right before you break out. Are we going to break out to the downside or the upside? That much is unknown. I'm assuming we break out to the upside. But we don't have to break out right now. The volume can get lower. It can get, and guys, we are in the holiday season. It's not even Christmas week. It's not even Christmas to New Year's Eve week yet. Volume probably does get lower. Because again, the super wealthy in crypto, the people with the market making capabilities, the people with the big money to push things around, they're away. They're on holiday, right? All your big traders, all your big market making firms, they're on holiday. They're enjoying their lives. They've had a lucrative year while everybody else has been scratching their heads. They're not here. And we can see it with the volume, right? Since Thanksgiving week, it's been like that. And from Thanksgiving to the end of the year till New Year's, it'll probably remain that way. So again, being in this easily manipulated environment, it is easily manipulated because there's low volume. It also is being manipulated because we can see the 1 hour time frame. We see the bars happening all over the place. Do you think this very obvious breakout of this trend line, do you think now they're going to stop playing games? Do you think now, right now, now that everybody's talking about this bear flag breakout that's going to send us to lower lows, this confirms the bear market. Now they're not playing games. Now the path is clear. Right, now it is, yeah. That's my whole thought. There's one more thing that I want to leave you guys with, okay? We didn't really do too much TA. I just did my whole rambling rant there of why I think we're not going to go lower. In all fairness, the 4 hour time frame, the RSI, the stochastics, and the MACD, they all do look bearish. So with that being said, even though here we are, we were calling for the low at 85.6K, we could go lower. We could go lower. And it's okay if we do. From a low to a high, and maybe even though it's a fake out high, maybe we should take that high. From a low to a high, we're right at the golden ratio. It's a perfect area to bounce. Guess what? If we don't stop here at the golden ratio and we actually go lower, we can bounce off the 786. Yes, we can bounce off the 786. We can see a higher high even after getting a lower low. Yes, we can. Absolutely we can, right? Look, we did the same thing here. We got a lower low here. We broke out of this trend here. We got lower than all these lows, and as soon as we did, boom, that's when we moved up. We actually bounced from an area that didn't make any sense either. There's no fib that we bounced off of right there. Or actually, maybe at the time we did. Let's see. That was the golden ratio zone. It makes a little bit more sense that way. But golden ratio support zone, golden ratio support zone. You get the point, right? We're breaking out. And again, if you're looking at the short-term stuff, this seems really intense. You're looking at it, you're like, wow, that's a lot of volume. What do you mean that's not a lot of volume, C-Zar? Zoom out. It's not a lot of volume. It's actually more of the same shit we've been seeing since the 21st of November. It's not a lot of volume at all. It's actually a weaker spike compared to anything else we've seen. This was more intense, right? It's not a lot of volume. We're very oversold on the 1 hour time frame. We look bearish on the 4 hour time frame, but you look your worst when you're at your worst. So I'm assuming soon enough we will be done with this. We look at the 4 hour RSI. There is a bit of a downtrend. You've got lower lows and lower highs. Typically these downtrends end in the oversold zone, and you are there. The ending of a downtrend does not mean that we can't go lower, but we're probably closer to the low than we are to a fresh drop, a fresh breakout, with that in mind, right? And if not, maybe at least bounce here, we move up. If we reject here and then we come back down, then we can talk about dramatically lower prices. Then we can talk about maybe going below that low. But until that fails, I'm under the impression that we are closer to a point of which we move up rather than a point of which we move down any more significant amounts, right? We've already done that. There's one more thing I want to show you guys here, and it's the 123-day moving average. The 123. I don't know if you guys know, shout out to all the OGs. If you've been watching my YouTube channel and you remember the 123-day moving average, or the 123, the 123 moving average at all, if you remember it, that's from like the OG days, right? We used to have that on every single video. We've taken it off just because I don't like moving averages on there. I use them whenever I'm not making videos. Like I'll use different things. Like I've got these ones here, you know, and I like to try to keep things simple. And I think these three indicators are easy to understand. Moving averages are easy to understand too. I just think it looks, I don't know how to explain it. Just it adds more. I like the charts to be clean. Anyways, I want to be the one drawing the lines. I don't want lines drawn on there. Does that make sense? Maybe it's an ego thing. Anyways, this line, the 123, there have been points of which we found direct significance at it throughout this whole cycle, right? You know, if you're in a bull trend and you're below this line, it's a perfect time to buy. If you're in a bearish trend and you get to the line or above the line, it's a perfect time to sell, right? It's not always that simple. There were perfect times to sell here too, and those were well away from that line. But here, when you've got higher lows and you're forming higher highs, you get below the line, perfect time to buy, right? It's a perfect buy signal. Here, you've got lower highs and lower lows, perfect time to sell right above the line. It's not that cut and dry. It's not quite that simple, and that's not the point that I want to go over, but I'm just reminiscing with the 1, 2, 3. We haven't talked about it in a while. What I want to show is that throughout this cycle, there have been several moments where we have seen the 1, 2, 3 shift from an upward sloping angle to a downward sloping angle, okay? Upward sloping to downward sloping. This downward sloping moment started, let's see here, hold on. Started right here. I think that's fair to say, right? Let's just zoom in a little bit and see. That started probably like right there, right? That's where the line, not where the price topped off, but where the line, the moving average topped off, right there. Where did we find our low? That low came in right here 30 days later, 31 days later, 31 days later. Okay, let's just make sure. I want to try and be as specific as possible. I want to be as accurate as possible, pinpoint accurate here. I'd say that was the peak. So 32 days. 32 days. We found the low. Okay, we go to the next one. The line, again, not the top of the price, but the line, the moving average, started to slope down here. The top was here. The bottom for Bitcoin's price was here. 33 days later. 32 days, 33 days, right? And that was the low both times after this trend line sloped down. It's the 123-day moving average. This is not an easy line to change the slope, right? You're in a bull market, predominantly it's going to be up, but when you've been consolidating for months on end, it's still up. But then it finally shifts down, and in those moments where it shifts down, that's when we put the countdown on, right? From whenever the slope goes downwards, 32 days the very first time that it sloped down this bull cycle, 32 days. The second time was 33 days. The third time here, I think was less time, but let's just see. It looks similar, maybe. I've measured this already. But that slope, I would say we started to slope down, what, like probably right here? Right here? Our low actually came in 26 days later. Now, 26 and 33 is a lot more, it's a lot further away than 33 and 32. But 26 and 33 is still pretty damn close. That's like a week's difference, right? That's literally 1 week's time in difference. And again, if you bought, let's say even here, you didn't do 33 days. Let's say you did 25 days. Let's say you did 25 days here instead of 32 days. You still would have bought at relatively lower prices. I mean, here, you know, maybe you would have bought up here, to be completely fair. Maybe that one's the odd one out, but still, 26, 33, 32. The most recent pivot that we've had was here. That pivot happened right here, and I'm going to be so specific. We're going to get dead accurate with this one, right? It's right there. Right there. You can't argue that. There it is. Right. Now, we have, as of now, from that pivot, it has been 43 days, 44 days. From what we've seen this whole cycle, just based off this moving average, if we're assuming we're still in a bull market, and I am still assuming we're in a bull market, if we're in a bear market, these rules don't apply, right? In a bear market, you can be, you can continue to go lower. You probably will continue to go lower. But in a bull market, these rules apply. If we're in a bull market, then we are past the point now, 44 days, we are likely past the point where we would find a lower low. because typically we find our low within 33 to 26 days. That's at least the prior 3 iterations. This time we found support right at the 19th day. Now this was a little bit less, right? This from the shift here to the point at which we found support, or the low itself, is a little bit less time. But this drop was more intense than any of these other drops. This drop was more intense, actually. To be completely fair, this drop was more intense. But it took from the high to the low, that took a lot less time. Whereas from the high to the low here, that took a lot more time. This one took a lot less time. So I think because we dropped so fast, so immediately, instead of having all this consolidation first and then just some wicked volatility on the way, I'm assuming that this is why the low can be dependable as a earlier time frame, right? And instead of it being around the same time, it's a little bit of an outlier. It is a little bit of an outlier, but we still have the higher lows overall. And the thought here being, again, that we've seen over 33 days now. We've been at 44 days. I don't know if we go below this low, if we're assuming we're in a bull market still. If we go below that low, that very well might be, because this would be the first time that we see a lower low past a 30-day period, that might be another indication that we are in a bear market. We go below this low, maybe we are in a bear flag. If we go below that low, we're breaking structure. We don't have higher lows on a macro scale anymore. Maybe we are in a bear flag. And in which case, this thought that I'm promoting doesn't matter anyways. But also think about it like this. From here, whenever we moved up and then we shifted down, look at how quick that shift was, right? Look at how quick that shift was right there. Look at how quick this shift was right here, right? Here, this shift was slow. It was gradual. It was very, very, very slow. And then finally you shifted, right? Where here you're moving up and then you shifted. Here you're moving up and then you shifted. Again, just trying to make sense out of why it's 19 days instead of the longer amount of time. We were slowly shifting before. Like we hadn't technically been sloping down until this point, but we had definitely lost a lot of momentum. So again, just kind of thinking about it here, adding to why I believe that this was a lesser amount of time, because we'd already been consolidating for quite some time beforehand. So that's kind of why I think it's a little different, right? Different environment, different results, but same kind of thought that we're at the low point here. After this line shifts down, typically by now, 44 days later, 50 days later, whatever it is now, we have found support. I don't know, it's just something interesting that I was looking at yesterday. A lot of people don't use the 123-day moving average. I use it because 123 is like it's like an angel number, right? It's like a serendipitous number, and then also 123 itself. If you want to get away from the Fugazi numbers having significance theory, some people believe that, some people don't. I think numbers have meaning. I think that math is like the language of God, is the language of the universe, right? That, in my opinion, that's what I think. So I think numbers do have power, but if you don't believe that, let me explain it in a more logical sense then. 123 days, what's 123 days times 3? That's 369 days. That's pretty close to a year, 365. 123 on a daily time frame is basically a third of a year moving average. 123, I want to say on an hourly time frame, is like a 5-day conglomerate, right? Because 24, 48, 96, 100, and would it be 120? It'd be 100 after 5 days on the 1 hour time frame. It's 120. 123 is pretty close to 120. 5 days is a standard business week. So you've got the business week, the stock market week on average on your 1 hour. Whenever you use 123 on the 1 hour, 4 hour, daily, weekly, even the monthly, they come around these somewhat significant periods of time. It's not pinpoint perfect, right? But it's pretty close to all of them on different scales. A third of a year on a daily time frame. 123, that's 2.5 years on, or maybe no. It's probably closer to 2 years actually on a weekly time frame. So daily time frame, you have a third of a year moving average. Weekly time frame, you have a 2-year moving average with the 123, right? That's with the monthly time frame. How much would that be? It's like a 10-year moving average, right? It's got these significant things. So I was just playing with that yesterday, and I was looking at it, and I'm like, holy shit, we've actually found support right after these moments all the time. So this should be the low. That really should be the low there. If not, that might be the sign that we are actually in trouble, that we are in a bear market, and that we could go below 70K. I don't think we will. I think we're in a heavily manipulated environment. 85.4K is the price now, so we have gone lower than 85.6K, and that's fine. I think we're in a heavily manipulated environment. I think this bear flag breakout is exactly what people are looking for to make them panic sell at a higher low, right at the golden ratio too, from this low to high. It's a perfect time to bounce, guys. And at the end of the day, I don't think we're doing this. I don't think we're doing this. I think we're doing exactly what we've been doing, guys, until January. Yeah? Hit the like button, subscribe. Thank you all for being here. Expect some wicked volatility. This week, mark my words, we'll close green. Take care. Bye-bye.